Hello, welcome in. I am Lisa J. SOXX. Thank you for tuning in for this week's Stock Talk episode. Okay, so we're going to get right into today's topic, and then at the end of the show, we are going to go through the chat and go through any questions. All right, so today we're going to be talking about some space ETFs, especially because this is in the news a lot right now. We're seeing a lot of search for space stocks. Of course, this is exploding. We're seeing that the date for SpaceX IPO is expected in just a few weeks from now, and it's expected to hit with a valuation of $1.75 to $2 trillion right out the gate. So this is something that is catching a lot of people's attention. I try not to talk about too many conversations that I have with people because I don't want them to think, they can't talk to me without it winding up in my show. But I met someone a couple of days ago that's not very much into investing, but they want to figure out how to buy SpaceX IPO. But I'll come back to that. Thank you, Stevie, Thriving Globe with Joe, Nora, Daryl, everyone who's chatting so far. But I'm going to get right into the topic. But I will be coming back to the chat in a little bit. So we're going to be taking a look at 3 ETFs, and those are going to be UFO, ARKX, and ROKT. Those are a few that I chose, but there are thousands out there of ETFs, not specific to space, but you can find anything that you want to invest into by finding the right ETF that fits your needs. So these 3 ETFs have totally different personalities, but they are going to give you the type of exposure to these space exploration and different parts of space that you might be seeing in the news, like with SpaceX. So one is pure space, rocket ships, things like that. When it comes to ARKX, that's related to Cathie Wood, which is a notable person that you may want to follow her lead as well as her team on what she invests into. And then the last one we're going to be taking a look at is a bit more of a stable mix of defensive giants, but giving you that exposure to those space stocks that we're hearing about. So by the end of the stream, you'll at least know a little bit more about 3 ways that you can get exposure to these type of investments. So let's get started with taking a look at, first up, UFO. All right, let me remove this, and we're going to go back to sharing this chart here. Okay, so this is UFO. It is the Procure Space ETF. Current share price, $56.25. Year to date, it's up 45.54%. It's been around since 2019. It has 54 different holdings here. And so a great way to get started with investing into any group. You're not forcing yourself to bet on one company's performance, as always, which is why we love ETFs around here. So these companies are satellites, rockets, Earth exploration from space. These are the type of things that you'll get exposure to by investing into this ETF. Now, investors are putting a lot of money into this one. It's been growing rapidly from around 50 million not so long ago to passing the 8 million in assets already. And this is a look at short term on the performance year to date. But as I said, it's been around 2019. So we can go ahead and zoom out and take a look at what the performance is looking like. I clicked on the 5-year and it's up 93.77%. So that's a look at what it is. It tracks the space index. It's recently updated how it's going to go about its rules and adding new investments. So when big companies like SpaceX hit with that IPO, they'll be able to quickly add this when it goes public. So for beginners, this means that UFO is built to stay focused on pure space, not get diluted by other stuff. But make sure that you are keeping up with the best performing investments in this realm. Okay, so now let's take a look at our second ETF. And I'm going to go to another screen that's going to show us some analytics of all of them against each other. Now, this is ARKX, which is Space and Defense Innovation ETF. Now, as I said, when we see ARK, we think Cathie Wood. And when it comes to this one, it is a more actively managed, innovation-heavy ETF. So this one is different. It's not pure space only. So Cathie Wood and her team invest into space exploration, but you're going to also get mixed in here robotics, AI, 3D printing, sensors, autonomous technology, and defensive. So it's broader. It gives more of the future of technology when it comes to this area. So, but it also includes that space that people are very interested in having exposure to when it comes to their investments. We'll take a look at the holdings when I switch over, but the performance has been solid. Year to date, it's up 16.77%. And I'm going to also zoom out on this one. This one's been around since 2021 and has 34 different holdings in it. And over the last 5 years, or on that time range, it's up 70.39%. Okay. Now, I don't know if Nora is still here. Nora mentioned Rocket Labs 1 week, and that is definitely going to be a holding that is in these ETFs. So ARKX, it's not always the strongest performer on paper. We're already seeing that as compared to the performance of UFO when we push that out to the 5-year. But it has a strong story. It has flexibility to bring in those higher performing investments faster. So as always, you have to do your research and find what's the best fit for your investment style and what you are trying to achieve. Now, our last ETF that we're going to be taking a look at is ticker symbol ROKT. And this is the State Street Financial Frontiers ETF. So you're getting a mix of defensive and hybrid here. So space and defensive companies, plus even some deep sea exploration. It's had, when we go, let's just take a look at the performance, and then we're going to switch over so that we're looking at some different things about these 3 ETFs together. But year to date, this one is up 38.17%. And then if we zoom out to the 5-year, it's up 193.18%. It's been around since 2018, has 36 different holdings. So now let's switch over to stock analysis so that we can kind of look at things on the more easily against each other. So when it comes to expense ratio, UFO and ARKX are both at 0.75%, while the State Street Fund, ROKT, is at 0.45%. So that's the lowest. UFO and ROKT both pay a dividend, 0.29%. And let's go down a little bit just to give at a glance what the average return is on these funds. We see that UFO has pretty strong results on the year, up 135%, while ROKT was 106. And then the ARK Invest fund is pretty much in the middle. And let's go down to the holdings. So these might be names not as familiar especially in, I would say, UFO and ROKT. But as I was saying, we were looking, I think 2 weeks ago, because I didn't go live last week, we were looking at Rocket Labs, and that's pretty heavily weighted on all three of these funds. First position for UFO and ARKK, and it's the third heaviest weighting when it comes to ROKT. Some other names that might be familiar are definitely Google, Amazon, and the ARK funds. But I know SiriusXM, I believe, is in here. Let's see. Garmin, that might be something that you've heard of back when we were using, here's SiriusXM. It's the 9th holding in the UFO fund. But you can easily take the time to look at these names. If there's some individual companies that you might have been interested in having exposure to, but you want to go this route of using the ETFs in order to build your portfolio, let's go Rocket Lab. I see you. So this is the way of knowing what you can gain exposure to and then build from there. So as I said, the UFO fund, pure space. The ARK fund is innovation, but you're going to get that space exposure there. And then the ROKT is defensive and space hybrid. Now, as I said, it has the lowest fees at 0.45%, but these are all more substantial as far as the fees than you're going to get with a basic S&P 500 investment or something like that. And we're going to get a little bit more further into that, but I'm going to take a look at the chat. And as I started off the show talking about if you've been seeing SpaceX IPO coming soon in the news, and I personally have never invested into an IPO. Just personal preference. Don't want to deal with getting locked out. Don't necessarily want to deal with the swings and volatility and just the stresses that may come with investing into an IPO. But if that's your personal preference, I'm sure you will be there day one, ready to get your order in. But if you would rather rely on your ETFs for exposure, these are three that we just ran through that will most likely be adding it very shortly after its initial IPO. So I don't think I've ever invested. Let's go back to here. I don't think I've ever invested into an IPO, but I've heard others give a reference of maybe 6 months, but I personally don't think I've ever invested into any company that was even in that young of a stage. And, I've used examples in the past of what happens with it, obviously 20 something years after Amazon has been around, it's a much easier time to invest into it than way back when it was not profitable, before they had AWS and the multiple different ways of bringing in revenue. But those who held on from way back then until today are really seeing the reward in their portfolios. Okay. All right. So let me just quickly see what other notes I had. So these are a few different funds. And like I said, very different, but that's what you can always do, to do your research and find an ETF that is the right fit for you, because it's definitely out there. So UFO is an index rules. So it's going to specifically update with fast track inclusion. So if that's something that you want to make sure that you're not in a fund that is going to have you waiting for some time to have SpaceX included, that might be something you want to take into consideration. ARKX is, a managed fund with Kathy Wood and her team. So another area where the inclusion might come quicker than something else, that another fund that has a different rules-based structure. But in time, these are all funds that should give you exposure to SpaceX. So the target date for the IPO is about mid-June from what I've been seeing in the news. And this is going to be one of the biggest IPOs ever. It's bringing massive attention already to this space sector that we're touching on today. So let me know in the chat, what do you plan on doing? Is this not an area that you plan on having exposure to? Are you going to buy the IPO, or are you going to hold off and wait to get your exposure through your funds or one of these ETFs that we've even touched on today? Okay. So Daryl is saying that he feels an IPO and SpaceX is something to hold on to forever and pass down. Okay, so he has a high conviction in what he's thinking of what SpaceX is going to do. Okay. All right, I'm just taking a quick look at the chat. Too risky. Okay. Spread the risk. All right, so those are just a few funds and a topic that I wanted to make sure to highlight, because investors are thinking about this, and I'm sure, if it's not going to be, I would think of this as a satellite investment, something to complement and go along with your core investments that give more stability and diversification. But I definitely am a person that is with, striving to have quality investments in my portfolio and taking into consideration what I want to have additional exposure to. And so that's where I go and do my research and incorporate investments. Like, for example, right now I'm working on SMH to bring in that added growth and exposure to another area, which is semiconductors. But, you have to do what's right for you and the growth that you want to achieve. I'm not encouraging anyone to do anything that is too risky. I want us to be mindful of our risk tolerance, our timeline for our investments to recover, and make sure that you are on track with that. I don't want you to be too aggressive when it comes to your investments because you feel like you're behind and you need to catch up. Don't let anything like that stress you out. Take your time, put your thought into what you're going to invest into. So I know we ran through the numbers, but I'll just put it out as far. This is on the 10. I don't think any of these are 10 years old yet, but again, just putting them up against each other. I put this on the 5-year, but this is all three of the funds together. So ROKT is up about 200%, UFO 110, and ARKX 71%. And as I said, as I always say, past performance is not a reflection of future performance, but you have to reflect on it. You have to take a look at the rules on how these funds rebalance, and take a look at those top holdings and dig into them a bit to see what they are on track and expected to achieve. So again, just a note, ROKT has that lower expense ratio at 0.45%. Now, we're going to talk a little bit more in detail as to what that means for your portfolio. But first, let me go back to the chat and see if there's any questions or comments. Please put them in again if I missed anything that you want me to reply to. Thank you for tuning in, Elevated. And Rod, thank you. Happy Sunday. You're driving and listening. Okay. Okay, and before we move on to the next, I see another person. Someone put it in my chat early this morning too. I think they meant to put NASA, NA. Let's see. I actually pulled it up because I think someone else had mentioned that, and that's not one that I had pulled any details on, but we're going to take a quick look at that. All right, so this is another ETF that seems to be on the minds of my viewers. Two of you now have put it in the chat, Frank and someone else earlier today. So this is ticker symbol NASA, Tempa Space Innovations ETF. And so again, Rocket Labs, the second heaviest weighting as far as the top 10 in this fund. EcoStar, Firefly, not names that are very familiar to me, but those are a few of the top holdings. This has an expense ratio the same as two of the other funds that we've already looked at today at 0.75%. It does not pay a dividend. And let's just put it in a chart with the others so we can check on the performance against the other funds here. NASA. And this is stock analysis that I often use when we're live or in some of my videos sometimes. Gosh, why am I getting bombarded with ads right now? 5-year. Oh, this must be a very new fund. Let me take a second and check on that. So this fund has 36 holdings and its inception date is March 30th, 2026. So not much data for us to reflect back on as far as performance. Let's put this down to 1 month just to see what it's been doing. On that short of a time frame, it's leading at 19.62%. But yeah, it's a very new fund. So take that into consideration, but that's another one that you might want to put on your radar of ways that potentially you can get in on SpaceX when it hits after that IPO, as well as just in general, if this is an area that you want to have exposure to in your portfolio. Now, let's see. Let's remove this and go down. Let's see the buy price. I know I don't know what they expect the IPO price of SpaceX to be when it hits. Yes, I think Mars would be another one. I'm not sure of that one. I can throw that on too before we move on to. Did I touch on Mars when we did the other live the other week? I'm not sure. Let's see. Mars is the Round Hill Space and Technology ETF. And let's check on the date for that one. Another very new fund, March 5th, 2026, with 29 holdings, an expense ratio like most of the others so far today, 0.75%. And I think we still have this on the 1 month time frame. And yeah, it's up there with NASA at 19.30%. But like I said, again, brand new. And that one also does not pay any dividends. Not that this would be a dividend focused investment, just mentioning. So there'll be nothing coming in to help offset that higher expense ratio. Okay. All right. So if this is something that interests you, we have two more added to the list in order for us to continue doing your research to find what might be the best fit for you. Now, let's talk a little bit about ETFs and index funds in general. So, someone recently said to me that they invest into all individual stocks, and I think their investing journey might date back to the 80s or so. But I think that all of us today definitely have the option of building a diversified portfolio with low expenses using a variety of ETFs or index funds, mutual funds. There are 5,000 different ones, about 5,000. There's about 6,700 different mutual funds to choose from. There is $13 trillion in assets held by these ETFs. And as we've seen even today in some of the choices that you guys are throwing out in the chat, we came across two new ETFs that just came out within the last couple of months. We've already looked at recently DRAM, which just came out at the beginning of last month. So we're seeing this in the news. We're seeing the different areas of companies and investments that they're grouping together for us to have exposure to. So don't feel like you have to know how to pick the best one. These are all pretty much more concentrated funds that we took a look at today, with maybe 30 to about 60 different holdings. But this is a new area that is definitely on track to have potential growth, just like with AI. So this is a way that you can have exposure to it and be on track to capture some of that growth for us so that we are not here just being, when it comes to space exploration and these type of things, not necessarily a consumer, but in general, want to be on the ends where we are always investing and reaping those rewards for ourselves in order to build wealth like the wealthy do. So let me take a look back at the chat. Has SpaceX 10%? No. Has SpaceX exposure 10% NASA ETF? Frank, I'm not sure. I'm not sure if I'm understanding your comment. Okay. All right, so this is just something that I wanted to touch on because I think that these numbers can definitely show you that don't just jump at the first one that you hear about. Take some time, pit a few against each other, and decide for yourself. Reflect on if you're willing to get into something that's very new. If the expense ratio is in line with if the growth potential and the growth that you're already the performance you're already able to see, do you think that it is in line with what you are willing to pay as far as those expenses? And I have a breakdown on a little bit with the expenses. So I created this thinking of for the 0.015%, that is my expense ratio on my FXAIX, which is an S&P 500 investment that is one of my foundational investments that I hold when it comes to my retirement accounts. So I use this to give you guys just a visual of $1,000 invested, 10,000, and 100,000. How much yearly are you going to be losing to fees if you invest into any ETF or index fund? There are a few that have a zero fee, but that's not the norm. Most have a fee. I strive to find one that is low because obviously fees means money out of your pocket that's not, staying invested and building and growing for you. So an example of a fund 0.015, that's my FXAAX. 0.03%, that's an example based off of something that many of us might have, like a VTI or a VOO. Many Vanguard funds or something like SPYG, SPYM, they usually have expense ratios of, say, 0.08 and below. So you can use this as a guideline to say, okay, so if I had $1,000 invested into VOO, for example, at 0.03, that's 30 cents out of your 1,000 going to fees, $3 of your 10,000, $30 at 100,000. So as your portfolio grows, these numbers are going to scale up. Now, all of the funds that we looked at today were 0.75%, except for ROKT, which was 0.45%. And so the two examples here at the bottom show you those breakdown of the fees based on the 1,000, 10,000, 100,000. So think about how much you're going to be investing into a particular fund, how long you're going to be holding it for, so that, and of course, compare that to the performance that you're gaining to make sure that it's in line with your goals. It's in line with, the amount of investment that you have there to warrant you spending this amount for fees on a yearly basis if it is something that you are going to be holding long term. Okay. All right. Okay, so guys, let me know in the comments. Let me know your thoughts on what we've been going over today. Is this an area that you have interest of having a more direct exposure to, that you feel that you might need to incorporate a position into these ETFs that we're looking at today? And do you think that it's going to be a significant investment for you, that you feel that you're going to be able to, the performance is going to outweigh the amount in fees that it's going to take to be holding this investment long term? I finally hit the like button. Yes, guys, don't forget to hit the like button. I forgot to make note of how many subscribers I had at the beginning. I think I was at 77,970. And right now we are at 7,972. So we have goals. We want to grow. We want to hit that 8,000 mark soon. So if you're new here and you're enjoying this conversation, this is what we talk about over here all of the time, whether it's live streams, videos, shorts. We're focused on building wealth by investing into individual stocks as well as ETFs. But I know you guys love ETF and index funds around here. And it is a great way, especially if you are a beginner or a less hands-on investor. Investing does not have to be complicated. So I always like to highlight choices like this, but I want you to make sure that it's in line with your expectations. Don't just jump in because you hear about something. There could be a better alternative. There could be something with lower fees, or there's just so many different elements to it. I always get questions from people, and sometimes I get the details that I need. A lot of times I don't. And I'm always saying, I don't know your age. I don't know your risk tolerance. I don't know your timeline on when you're going to need to tap into these investments. I don't know how much you already have invested. And so these are things I'm always mentioning and highlighting that if you didn't share all of that detail with me, you need to evaluate that, because these are the things you need to reflect on so that you're making the right choice for what you are, what your goals are, because it's not a one-size-fit-all thing. We all have such different circumstances, different income, different living expenses, different amount of responsibility as far as our kids, our parents, anyone that you're contributing any financial help towards. Okay, thank you for the expense ratio breakdown for 100K. Okay. All right, I might post that somewhere because I thought that would be helpful. And when I make my videos, I try to make them concise, and I just want to make sure that if there's anyone out here that when I run through my videos and I mention the expense ratio of different funds, I want you to make sure you're really taking it into account when you're making the choice that's right for you. So, and realizing that as your portfolio grows, those fees are going to grow. So if you think that something doesn't sound significant and you're just starting out, the portfolio only has $20,000 in it, for example, I want you to think bigger of when it is at 200,000, 300,000, so that you're having your portfolio weighted in investments that are growing, that are giving you that performance, but also not eating away at your fees over the long term. Would it be a better fit for you to be in something with a lower expenses if you're going to be holding it for the next 30 years, or do a mix so that you're getting that balance and you're getting that growth and not necessarily, being overwhelmed by the fees that are attached to it. That would be another great chat, the effect of fees over the years. Okay. I do FedEx rounds at night. I've been seeing more Starlight getting shipped lately. Multiple boxes, almost like a light grade satellite setup. Okay, so that's one of the top holdings that you're familiar with. I hear you. All right. Great channel and show. I learned a lot here and really admire your approach to investing. Thank you. Thank you, Justin. I appreciate that. And thank you for watching my videos. Your name is familiar to me because you comment. All right, I'm just taking a look through the chat. Starlight has no IPO yet. It's Elon's internet company. Oh, okay. Okay. So it's not in these funds yet. All right. So, guys, let me know if you have any other questions, comments. Thank you for the suggestions on topics that you want to hear more about in future lives or videos. And don't feel like you have to do everything that you hear about. You have to do what's right for you, and um, be aware, and be ready for the volatility. These investments that we're looking at today are not going to move like an SCHD, for example, something that's going to be very stable, or just the total S&P 500. This is something very specific, but higher risk, but potential for higher reward. And so those fees are associated with it because these are funds that think that are some of them are very new, but they think that they are going to be on track to prove themselves as worth the fees that are associated with it. So you have to do your research and decide what trend you want to have in your portfolio. You will use your play money for these ETFs? Okay. Okay. Yeah, I'm a person that when it comes to my investments, I mean, there's every once in a while I will start, put some money into something just to kind of track it, to have a feeler, but it's usually a very rare that I do that and then I don't continue building into it. I would rather have a few investments that I'm building into instead of, a portfolio that's getting up to 30, 35 plus positions. It's not for me to have to track all of that. I definitely feel that, with a mix of ETFs, that you need that many to be on track for to build for the long term for whatever your goals are. Hopefully, number one on your list is retirement, like it is for me. Okay. Hello, Miss V. Nice to see you. And the one, thank you for tuning in. So, guys, as always, I will add chapters to this if you do want to come back to it, but we didn't get into too much detail. Like I said, I might try to post a couple of the images that we went over today, if it might be helpful to you to reflect on, or I might use it in an upcoming video so that we can continue to reflect on how those expenses are going to impact our portfolios long term. If you haven't already, make sure to like, subscribe, hit that notification bell, hype this video. Those of you that have that available to you, I think you get 3 hypes per week. So if there is a video of mine that you enjoyed, I appreciate the support in that way. Make sure you're commenting on all of my videos when you see them. Share a comment, share a question. Okay. I'm not seeing any questions in the chat. I hope you enjoyed this topic. And I may go live again this week, so make sure to have on your notification bell and just let me know your thoughts on, how things are going. I shared a video recently on, I think my last video yesterday. I'm working towards a goal of getting to 200 shares of SPMO in my portfolio, which is the S&P 500 Momentum ETF. So, does anybody have any goals that you want to share that you're working towards? And yes, I even said this in my video. I'm working towards 100, but there have been times where I was working towards 1 share, and I've shared those goals with you. These investments are all different prices, so it takes time. It takes time for me to get to a share of Meta. So I'm glad to be working towards those small goals. But I think whether it's, it depends on what your thing is. I like to sometimes set share size goals, sometimes set dollar size goals. It depends on what it is. So this is Invesco's S&P 500 Momentum ETF. I think I'm at 188.1 shares right now. An investment that has really taken off for me, that I started late last year. And now already I'm seeing those gains. This is something I definitely am going to be holding for the long term. It is in one of my retirement accounts. But another one that I'm still working on is Meta. And this one has been having its struggles right along with another that I'm working on, which is Microsoft. But I have my long-term vision on when it comes to these investments. And so I'm buying and holding, and in time, according to the fundamentals, these are investments that I'm sure in the future I'm going to be glad that I put the work in now and I'm still holding. Like other investments in my portfolio that were a bit stagnant or range bound at times, but now I'm seeing the gains. One of them being Google, for example, which is up 245% over the last 5 years. So let me take a look. Miss V, thank you. Make This Go Viral Crime Podcast, which is Miss V. Thank you for the super chats. I appreciate you coming through today and the support. Okay. Nora, did you share if you did you invest directly into any Rocket Labs? Did you trade it? I sent you a message the other day asking you about it, but I think you had brought it up in a past live stream. Okay, so you agree you only have a few positions. Yeah, I mean, to each his own. It's just not for me to have a whole different ton of different investments in my portfolio. Yes, thank you. All right. So, guys, I'm going to be wrapping it up for today. I hope everyone had a nice weekend last week. It was Mother's Day. These are actually some of my Mother's Day flowers. They're still holding up pretty well, so I have them up here with me. I've been bringing them up and downstairs all week because it's warm up here. This is at the top of the house. I've been bringing them down to the dining room where I feel like it's cooler. So I think that helped me to keep my flowers intact. I think I had forgotten that I had mentioned that my mom was in the hospital a couple weeks back. And someone had sent me an inbox message asking me about my mom and saying that they were praying for her. And I thought to myself, I wonder what made this person send me this message, totally forgetting that I had mentioned it on the live. But anyways, mom came home the Saturday before Mother's Day. So she's been home for a little over a week now. So for anyone who was wondering, she is doing better. She had surgery, she went to rehab, and now she's back home. But thank you guys for tuning in. Thank you for the super chats. And make sure to subscribe to the channel if you're not already. Hit that notification bell, hype the videos. Make sure you're always leaving me comments when you see my videos. Let's see. Hey there, Mr. Right Way. How are you? Thanks for stopping in. Okay. So, guys, my daughter's still not driving. She does not have her license, which is going to be a huge expense when that day comes. But I am off to go pick her up from work. Thank you guys for tuning in, and I will see you. Always tune in for me live every Sunday, 3 p.m. Eastern Standard Time. But have that notification bell on so that you are able to keep up with all of my videos and live streams. And I will see you soon. Stock it up.